Retiring to a low-tax jurisdiction will help you maximize your advantages and savings. If you currently live in one of the following states, which do not tax Social Security or pension income, you might want to consider moving. However, keep in mind that these states have various rates for sales and property taxes before relocating. In today's video, we will talk about the 13 most tax-friendly states to retire. So, make sure to watch the video till the end. And if you are new to the channel, make sure to subscribe to the channel and hit the bell icon, so you won't miss any future videos we upload. Number 13. Hawaii. A tropical island retirement is a common desire. The state tax rates for seniors may assist stretch your retirement budget if you are moving from a state with higher taxes, even though the cost of living in Hawaii can be expensive. Social Security income, money from employer pensions, and money from defined contribution retirement plans are not subject to taxation in Hawaii. In Hawaii, the average annual property tax on a home with a median value of $517,600 is $1,324. Local sales tax rates are often low, whereas the state sales tax rate is 4%. Number 12. Washington. Washington does not impose a state income tax, so regardless of your income from Social Security, retirement account distributions, pensions, or retirement employment, you won't have to worry about facing a big tax bill in the evergreen state. You will pay taxes on your property though. For a home valued at the median of $287,200, the median annual property tax in Washington is $2,631. Many purchases additionally come with an additional 6.5% sales tax. Number 11. New Hampshire. Income from retired jobs, Social Security payments, pensions, and distributions from retirement savings are all exempt from state income taxation for residents of New Hampshire. In New Hampshire, interest and dividends are the only sources of income taxes. Because there is no state sales tax, retirees can buy without worrying about paying additional taxes. Nonetheless, the nation's property taxes are among the highest. For a home valued at the median of $249,700, the annual property tax in New Hampshire is $4,636. Number 10. Alaska. The largest state by land and most northern in America has a distinct tax system. State income tax and sales tax are non-existent, but in order to pay for its services, the state must raise money, and it chooses to do so by levying hefty property taxes. In Alaska, the average annual property tax on a home with a median value of $232,900 is $2,422. Another special financial benefit for Alaskans is that after living in the state for a minimum of a year, they are eligible to receive an annual distribution from an oil wealth trust fund, which will total $3,284. Number 9. Nevada. You may come to Nevada for the casinos and nightlife, but you may decide to stay because of the low tax rates. You won't have to worry about paying state taxes on your earnings from a part-time retirement job, your Social Security retirement income, or your pension because Nevada does not have a state income tax. In general, property taxes are similarly minimal. In Nevada, the median annual property tax on a home with a median value of $207,600 is $1,749. Nonetheless, the 6.85% state sales tax rate is quite high. Number 8. Illinois. Illinois has an income tax. However, several forms of retirement income are exempt. Social Security and pension income, as well as income from employee defined benefit plans, IRAs, SEPs, government retirement plans, and military retirement plans, may be subtracted from one's federal adjusted gross income by retired citizens. Retirees could still be subject to additional taxes, though. The tax on real estate is substantial. For a home valued at the median, $202,200, the annual property tax in Illinois is $3,507. Additionally, 6.25% state sales tax is paid by consumers on a large number of goods, and municipal sales taxes are frequently added on top of that. Number 7. Wyoming. Income taxes are not levied in Wyoming. Therefore, no state tax bill exists for any kind of earned income or retirement. When it comes to purchases, retirees won't have a significant tax burden either, as the state sales tax is only 4%. Owning a home also spares you from paying exorbitant property taxes. For a home valued at $184,000, the median annual property tax in Wyoming is $1,058. Number 6. Florida. The majority of people are aware of Florida's gorgeous beaches and pleasant winters, but retiring in Florida offers more benefits than just a pleasant environment. Because there is no income tax in the state, pensioners who work part-time are able to keep a larger portion of their earnings. Additionally, you won't be responsible for paying state taxes on your pension or Social Security income. In Florida, the median property tax for a home valued at $182,400 in 2023 is $1,773 annually. In addition to the 7.02% state sales tax, municipal sales taxes may also apply. Number 5. Pennsylvania. In Pennsylvania, Social Security benefits are not considered taxable income. Withdrawals from IRAs made beyond the age of 59, as well as distributions from 401ks and other comparable employment retirement plans, are typically free from state income tax. However, pensioners in Pennsylvania must pay 6% sales tax on their purchases. In Pennsylvania, the median property tax for a house valued at $164,700 is $2,223 annually. Number 4. Tennessee. Tennessee does not tax earnings from employment, Social Security, or pensions. In Tennessee, low-income taxpayers 65 years of age or older are free from paying taxes on any income other than dividends and interest. There are also inexpensive property taxes. For a home valued at the median of $137,300, the annual property tax in Tennessee is $933. However, be mindful of the 7% sales tax when you shop. Number 3. South Dakota. Another state without no income tax is South Dakota. Social Security benefits, pension payments, withdrawals from retirement accounts, and income from part-time work are all exempt from state taxation for retirees. South Dakota does, however, impose sales and property taxes. For a home valued at the median of $126,200, the median annual property tax in South Dakota is $1,620. At 4.2%, South Dakota's state sales tax is one of the lowest in the nation, although local governments may impose additional levies. Number 2. Texas. Texas does not impose a state income tax, so retirees are relieved of the burden of paying state taxes on their Social Security income, pension, and payouts from 401k and IRA accounts. However, the state generates income in different ways. In certain regions of the state, real estate tax bills can be substantial. In Texas, the average annual property tax on a house with a median value of $125,800 is $2,275. Additionally, many transactions are subject to a 6.25% sales tax. Number 1. Mississippi. Mississippi's state income tax excludes a wide range of retirement income. In Mississippi, withdrawals from IRAs and 401k plans, Social Security benefits, and pension payments, both public and private, can be deducted or excluded from state taxable income. Property taxes in the state are also typically inexpensive. In Mississippi, the average annual property tax for a house with a median value of $98,000 is $508. Retirees in Mississippi, however, need to be aware of the state's 7% sales tax, which is rather high. It might be quite alluring to minimize taxes if your goal is to stretch a limited income as far as possible. When considering a move, it's critical to know which states provide retirees with financial advantages. But is the advantage of moving somewhere sufficient to make the relocation worthwhile? Not even you know. This brings us to the end of this video. If you liked the video, please consider subscribing and sharing, so we can keep bringing more content like this. Also, let us know your thoughts in the comments below. See you next time. Until then, happy retirement.